Greetings, Dr. Jeffrey Scott here. This is my weekend market update for the week ending in Sunday, December 29th, 2024. I hope you're having a healthy, safe, and happy holiday season. For those celebrating Kwanzaa, Hanukkah, Christmas, we're all going to celebrate the New Year's in just a couple of days. And the markets were anything but celebrating on Friday, but we'll take a look at that in a minute. Now, as I thought about a title for this week, I put our market setting up for a rally into the inauguration because I actually think that that could happen. There were a lot of stocks in a pullback to support. All we need is a little bit of momentum, and we know that Santa Claus rallies. It's 3 days before Christmas, and the first 2 days of the year is the rally, and we're right in the midst of that period of time. And so far, we're up, I believe, since Santa came, but really not as much as perhaps we hoped. So will Santa take us higher? Or I also thought about putting, did the Grinch steal the Santa Claus rally? Because I can make an argument both ways. So let's just take a look at the data. You make your own decision whether this market's going higher or lower, or is it both? Is it going to go higher and then sell off? As always, this is for educational purposes only. Anything I talk about or recommend should be taken just in the spirit of education and investment advice. Hey, I do have licenses. I am an MD. I'm board certified in internal medicine and medical oncology, but I have none of the financial licenses that would give me the right, the authority, or even the responsibility to advise your own investment portfolio and trading. So take this as education from a very long-term trader who likes to give back. The intent of the video is to demonstrate the tools of top-down analysis, how I apply them. Trading involves risk, and you are solely responsible for any decisions you make. Also assume that I may own or intend to sell any stock mentioned in this report, whether long or short. Trading stocks and options should be considered risky, and you should always consult with your financial advisors before making trades and getting into the market. I have tools for multiple platforms. Currently, those include Wealth Charts, TradingView, TradeStation, soon to be Metastock, and also soon to be the Market MRI Pro trading app. People ask which is best, and I say it depends what you're looking for. Which is my best grandkid? I can't pick. They're both good to me, and I feel the same way about the different platforms, and that's why you'll see me using several of them during this presentation. Now, I wasn't invited to present this year, but I do think the Wealth 365 event, as historically has been, is just a very worthwhile use of your time. It runs the 13th to the 18th. If you like what I do in Wealth Charts, it's a great time to buy Wealth Charts. And if you like my tools, it's the best time to get the tools. You may have to email me at htsidoc@gmail.com or one of my other emails for me to get you access to it. But that's the intent of this presentation is not a sales call. I'm not going to solicit you. And frankly, this isn't my event here. It's an event that I've had the luxury of speaking at in the past, but this will still get you a link that you can sign up. If you do like these videos, but you want something during the week and you want them short, I try and post every day at stocksanddocs.com. Certainly, if there's a big change in the market or something is happening, I'll post. I travel a lot, so it's not going to be every day. I do occasional live events online and sometimes in person, and I'm going to do an online event on Saturday, January 25th, probably from 9 to noon. Typically, they're 3 hours. I have 100 seats in my Zoom account. If it looks like there's a lot more interest than that, I'll expand it, but typically I limit it to 100. There's no cost. You don't have to be an owner of my tools. But for those that do own my tools, think of this as the quarterly meeting that I typically do after the Wealth 365 events to show people how I use the tools. The topic is how I approach the markets, why, what tools, how do I find high value trading opportunities, and we'll talk about how I trade them, what are my favorite options positions, how do I manage them. I will utilize multiple tool sets. It is not a wealth charts. It's not a trade station. It's not a trading view. It's not even a market MRI Pro program. It's really about how I use the different tool sets. I will launch the new market MRI app. So, spoiler alert, I probably will offer it for sale, which like I said, I'm not soliciting you in this video for any reason, but typically discounts occur at launch. I'm not sending invites out to anybody's mailing list. I have no mailing list. All I have is a top-down trader Google group. It's no cost. There's no solicitation. And if you're interested in attending, just sign up at Top Down Trader. You sign into Google Groups. All you need is a Google ID. And then you find Top Down Trader. You pick how you want me to contact you. And then I'll approve you. Why am I doing this? Because when I kept a mailing list, if you do too many send outs, you get labeled as spam. And then to Gmail accounts, for example, I was bouncing back. So I'm done with user groups, or mail list rather. I'm going to do things through my Google group. There were some questions about reactivating the Discord discussion. I don't want to do that because Discord implies a little bit that I'm available every day and during the day. I can control the pace. Now, for those that don't know what you get for Top Down Trader, I pretty much 3 or 4 nights a week will put out a customized video at no cost, no solicitation to the members of the site. And oh, by the way, membership requires just going to Google and signing up. There's no cost, no anticipation of a cost. So major markets tell the story. Now, I use HDSI to create these 2 charts. And whenever there's a 5-day week, it messes me up, or excuse me, a 4-day week, because they don't have price change from the prior Friday. They have a 5-day price change, and they have beginning of the week, which actually is from the open of the week to the close. So I just went and looked at the weekly charts, and I documented here what the change was from the close Friday to the close Friday. So what stands out to me? It wasn't a bad week. It was a very mixed week if you look at what's in the center here. VIX short, which would go up when the market's calm, was up 3.28%. The dollar, which will help the market if it comes down, actually was down a lot, 4%. Most of that, or much of that, well, it was a bit of a surprise, but not really, because we'll look at where it was at a topping area. Bitcoin was down a bit, as were bonds. Most of the indices are stuck in here. Now, as I look at the indices, what do I see? The Qs led up over the period of time 0.75, and they were led by semiconductors, 2 to 3% up, which were the big winner. S&P 500 0.65, the NASDAQ 0.63, NYSE 0.62. If we look at the IBD 50 up 0.34, the Dow 0.34, the Russell only up 0.21, and then the equal weighted NASDAQ and S&P did not fare as well as the cap weighted. And ARC Innovation, which had been leading, if we look at Friday to Friday, was actually down a bit. So a soft week, maybe that's to be expected considering the holiday week. Now, the volume on Friday was pretty strong, which I thought was surprising. Option expiration, at least triple witching, was the week before, but maybe there were some people who have big protected positions that were taking it off. I don't know why volume was so high on Friday. I'm sure there's a good reason that I'm missing. Maybe it was because of rebalancing. If we look down here, I did not do that fix on the 5 days on the sectors, but we'll look at those some other ways. Friday was not a good day. You could see markets were down pretty much across the board, and all the sectors were down on Friday. If we look at the QEdge tool, you could see on Friday in the S&P 1500, all the sectors, most of the industry groups and most of the stocks were down. If you had a great day on Friday, you were either short the market in cash or you're the world's best stock picker and had no positions open before the market opened. You could see here that all the sectors were down. And over here, you could see that we still have 86% of the stocks below the bin line of the Bollinger Bands. That's a lot. That's very bearish and getting to an extreme. We'll talk more about the buckets. The nice thing about the Q-Edge tool, and this is from Sagar Nandi, superiorprofit.co, is it takes the buckets that I've been following, Ian taught me 20 years ago, and makes it a real-time opportunity. If you look at sectors, industry, and stocks, you can see 2 weekdays over the last 5 days, which includes a very high volume positive Friday the week before. The markets look okay, but the last 2 days don't. And when you broaden out to 2 weeks or 4 weeks, you can see the markets are in a bit of a funk. Now, still a Sagar Nandi Q tool. These are the market breadth tools. I love this tool set. To me, it's reason enough to have a subscription to Metastock. And with my tools coming, there'll be even more reason. But what does this sheet tell me? This is the market breadth total view. Total view is a combination of the NASDAQ plus the NYSE, so it's big. And it looks up here, stocks above the 50 in yellow, the 200 in white, and how often in orange the 50 is above 200. Notice we've actually weakened here considerably compared to prior pullbacks in the market. So from this perspective, it looks like we might be getting a little bit oversold. If we look here at advanced decliners, very negative, up-down volume negative, and there's just not a lot of new highs and new lows here, and that might go against an extremism bounce. This little red area with 4 tells me that 4 of the major indices were under distribution, and you could see here the NYSE, S&P 500, the NASDAQ 100, and the Dow Jones Industrial were all under distribution on Friday. Here looks at the NASDAQ on the left, the NYSE on the right. Here I want to look at these little greenish bars. These are the 3-month new high, new low. Sometimes I call them 13-week, same thing. And they both rallied from oversold, but they failed here and are heading back down. This is just a weak market, but these are not enough of an extreme that says, hey, we're done. These skull and crossbones here are Hindenburg omens that occurred on both of the major indices that are, to me, they're an overhang of this market, suggesting that these could have been a top in here. And that means we're going lower, most likely. I'm not saying we're going lower. They could mean we're going lower. These 2 things here are called bingos, the magenta arrow down. Those are sort of the baby out with the bathwater signals. And then the light blue here represents what's called the bingos are down, the bangos are exuberance to the upside. And if we look here, you could see on the Dow Jones Industrial getting oversold, had distribution. Russell 2000, not quite oversold. You can see NASDAQ 100 down to the oversold area with distribution. The S&P 1500 distribution approaching oversold. And the S&P 500 distribution and not quite oversold. Not a strong market. Lots of things here to be concerned about. The weekly timing model. The last 2 weeks went negative on the Russell. You can see the Russell's come down, has broken below the WMA. The diamond is sitting above the WMA. Intra-week, it flipped to negative, but weekly charts don't close until the week is over. And you can see here the spiders and the Qs. So we have 2 longs, 1 close, and 1 short on the weeklies. So still the overwhelming direction's long, but not a lot of conviction. And on the short term, the dailies are all short. And so I think there's something to be concerned about. So despite Santa, this market has some risk. Look at 1-day performance. This is my Market MRI Pro 2. You can see on Friday, the leading ETF on the industry, the markets was the volatility. The biggest laggard was Russell, Qs, spiders, all down more than 1%. If we look over here, it's interesting that except for the Russell, they all closed above the midline of their range. So even though they were down considerably, they were off their lows. So was the Russell, but still not as much. And you could see here with the 35, the volatility was off its extreme. Still mostly are all new high, new lows. You'd expect that. one-day change, all the sectors in the S&P 500, not just the 1500, were negative. And if you're looking for leadership, Norway, energy, oil exploration, Southeast Asia, and uranium, that's it of the 40, 50 different themes that I look at, I guess 47 themes. And if you look over here, these are a number of advancing stocks, percentages 8% in the S&P 1500. That means 12 stocks were up in the S&P 1500. No, can't be 12, 120 stocks. 19% in the NYSE and 24 in the NASDAQ. If we look over 5 days, you could see the ranked over here that over 5 days, you did see some strength. But again, that fifth day includes the prior Friday, which is an outlier. So we have a steepening yield curve. Here's the 10-year, here's the 30. What does that tell you? It means that the stock market doesn't believe there's a hawkish Fed. You either get steepening by rapid rising in the long term or a fall in the short term. And my guess is the short-term rates are acting like the Fed's going to cut. But a steepening yield curve is not necessarily a good thing. Is there a recession in our near future? Well, the telltale is that if you look at the 10 minus 3 months or the 10 minus 2 years, both of which had inverted for quite some time, they have now normalized. If you look back to the 80s, when you cross back above the zero line, it's followed at some point by a recession. So yes, we're going to get a recession, but it doesn't tell me when. The diffusion index, when it gets below 20, minus 20 is when it gets concerning. It drops. Why do I say that? Because the gray bars, which are recessions, occurred when it got below minus 20. Now, we did not get a recession here, so it's not a guarantee, but I guess you can say as long as it stays above minus 20, you're okay. And then if you look at this measurement and high yield index option adjusted spread from Bank of America, no evidence of money tightness. Now, there's actually a smooth U.S. recession probability chart you can get from the Fed. And so if you're looking, you don't see anything going on here, which says it doesn't predict a recession. But if you look at them, they don't give you a lot of time before the recession occurs. Kind of it's like it's happening when the recession is starting. So the fact that we're not budging yet is great, but I don't think it means we have no risk. Hindi fire zone, I already told you that when we looked at the Q tools, the Hindenburgs have fired on both the NASDAQ and the NYSE. There has not been a major correction ever that was not preceded by the Hindenburg omen, but not all Hindenburg omen signals, even those that are confirmed, turn out to be significant. We're not seeing a lot of new lows on the NASDAQ, and even though, the NYSE's only got 2.2%. Short-term breadth bounced. You could see the 3-month new high in Wharton. They look at the total market, bounced up. But even though it's a little turn higher on both the stocks above the 200, stocks above the 40, the longer-term breadth is starting to deteriorate or continuing to deteriorate if you look at the 40. The buckets, again, most of the stocks in the S&P 1500 are below the midline of the Bollinger Bands. Now, when a market gets so oversold it's going to bounce, you start to see an accumulation of stocks below, which is this below zero line. They're not. They're mostly in the middle of the lower half. Still bearish in appearance. Now, where were we a week ago? So I'm actually breaking out the NYSE, the NASDAQ, the Russell 1000, the S&P 1500. And I'm looking at the buckets on those. And the thick gray here is where we were a week ago. And you could see a week ago, 50% the NYSE, 34 NASDAQ, over 50 on the Russell 1000, and 60% in the S&P 1500 were below their Bollinger Band. No shock, we moved to the right. But we haven't moved beyond the second and third bucket here. So still weak. And if you look at it today, and we're just looking at the thin gray, which is where we were yesterday, as we're moving slowly to the right, but we're not really populating here. It's kind of accumulating. It's moving from the far right and the far left to this area in here across the board. Friday, the markets were mostly The week's markets were mostly higher despite Friday's action to the downside. This just tells me there's nothing really worked more than anything else. Don't know what happened here. Must have been something that was an aberration. For the most part, earnings did not correlate with performance, nor did relative strength. There was one bar on both that popped. And if you look over here, these are just a number of lists I look at. And this is just assuming my list didn't change. Now, I had a bunch of contra ETFs, so I talked about last week that I lightened up on Monday when the market didn't blow up. And that hurt my performance of the stocks that I held last weekend, but it doesn't mean I held them all week. I was down 1.24. But if you look at it, most of the stocks are within, the groups are within a couple of percent of flatline. Here's the S&P 500. In orange are the groups from Investors Business Daily and Market Surge. In yellow are mine, both myself and the Market Surge are growth related. And you can see growth lag. That's the key driver of what I'm seeing here. Know your news and earnings. We got the Schiller price index on houses on Tuesday. Got some PMIs on Monday. We got New Year's on Wednesday. We got jobless claims, and we got ISM at the back end of the week. Really not much in earnings, as you would expect. So we logged gains for the week. Santa Claus rally, last 5 days, trading days of the year, first 2 trading days of the new year, began on Tuesday and doesn't always lead to gains in the market. The S&P closed 0.7 higher on the week. Dow was up 0.4, and the NASDAQ was up 0.8. Not really significant moves. Interestingly, the semiconductors were leaders. Friday, we struggled, broad-based selling. You could see 500 points down on the Dow. At one point, settled 333. S&P was down 1.1. The NASDAQ was down 1.5. And what was interesting is that this actually occurred on, look at higher than average volume on the NASDAQ and the NYSE. So again, I don't know if there was rebalancing. I mean, there's always options, weekly options expiration. Maybe that was the game, but that was interesting. It's hard to make much of the holiday trading, but the drop on Friday was on high volume. Weekly charts, we see lots of inside bars suggesting indecision. I'm still expecting Santa to drive higher into year end. I'm concerned as risk of recession seems to me to be higher than many people are expecting, especially the Fed. Will Inauguration Day tariff announcements be the trick to push us into a recession? Considering the great market performance in 2024, we didn't see much tax loss selling in December. Will we see tax gain selling in the first week as people want to harvest their gains but delay paying taxes for another year? Lee Tanner is somebody who I actually met a couple of times. I've been to the Palatuma San Francisco joint IBD meeting that they hold annually. Great meeting, great speakers. He sends out a list of high growth stocks that he's looking at or that he follows. He had 2 quotes. These are 2 paragraphs. I just want to go to the bold. It has been a good time to have a portfolio, but a hard time to build one. It's been difficult, I think, to enter stocks. Not only are we in a crazy volatility right now, as the market seems to be seeking out a top or potentially at the top, but a lot of stocks have been very extended. And then the other part is it's not a good time to short. So I thought that was interesting. That came excerpted from his email he sent out earlier today. Again, just to remind you of my Stocks and Docs daily video. When able, join my Google group to get invited to the live session. Cancel afterwards. I get a lot of positive feedback for the work I do there, sending out a video every night. You don't pay for it. You don't have to listen to it. It's up to you. And then I'll probably do something next year in Florida, probably early December. Still working on planning. But I did talk to the Orange County crew, and we'll probably do one middle of June as well. On to the charts. All right. So this is wealth charts. I'm going to start here, but I will use other programs as we go, as I need to. Let's start with the daily spider. This white line is kind of where we ended. Here it is, the prior Friday. And you could see we pretty much, except for the beginning of Monday and where we touched it again on the beginning of Friday, we stayed in a very narrow range, or we stayed close to that line. You'll see what probably looks like a doji candle when we close tails above, tails below. We'll see if there's a doji on the dailies. You might see you'll certainly see some bottoming and topping tails, probably more in the topping tail variety. You could see Monday we traded higher. Tuesday we traded higher into the close. I think this bar is just after hours trading on the SPY, even though the market's closed, I believe, at 1. Thursday we stayed flat, so heck, if we had ended the week on Thursday, it'd be a lot more optimistic, wouldn't it be? And then Friday we just sold off and pretty much closed just off the lows of the session. If I look at the other major indices, they all kind of look the same. So we're not going to spend much time there. If we take a look at the spiders, I was wrong, not much of a topping bar at all. But here's let's look at the weekly chart for that. So it's not a doji because there's a range, but you can see a topping bar and a bottoming bar on the weekly. But all this is an inside bar captured by the really negative bar on the prior weekly bar where we were down 2.16, up 0.65 on this week. If I go back to the daily, you could see a run up, pull back. Interesting where we stopped, which is our first target, which was the 50. Here's my next target, which is the tops here, which have turned into support. And then if that doesn't hold, we come down to this area, which were the tops back here. Bounce is good. Right now we're holding support, and that's the S&P 500. And one could see on the monthly candle a lot of a bottoming tail here to be very bearish. On the daily Qs, kind of like the spiders, we ran up beginning of the week, pulled back some on Friday down 1.33, and looking at the weekly bar again, an inside candle fully captured by the prior candle, and it is up 0.75. The diamonds, I'll go back to the Qs for a second. Daily Qs are holding well above the 50 and the secondary support below here. The diamonds have broken below the 50, have failed to get back above it. That's a little bit more concerning. Here's the 200, which would be the obvious support there. Where that line is represents a high here and a support here. So I think that line would be the first line of defense if we pull back, and then you get to the 200. On the weekly diamond, so on Friday on the daily, it was down 0.74. On the weekly, again, another inside bar, down up 0.34 on the week. And the Russell, like the diamonds, has broken through the 50. Probably, if this support area doesn't hold, it'll get down into this area here and the 200. It may just trade between the 50 and 200 right here. This had a false breakout to new highs and has sold off ever since the new high day, which was back on November 25th. You can see the weekly Russell, also an inside bar, actually up on the week, 0.21%. Commodity, actually not done that. We close that. Let's look at the VIX and the dollars. Let's look at weekly VIX. And you could see here on the weekly VIX was down 13%. UVXY on the weekly was down 11%. If we look at the diamonds, the dollar is the one that was interesting. And I saw this and I scratched my head as to what was going on here. This was the prior high area, which we broke through, but then we get to this area in here. And I guess we're seeing the mother of all double tops. If you want, on the dollar, if you want to believe that this market is going higher, and I'm not against the idea, folks, and this is November of 2022. That is when the rally started that carried on into 23 and 24. So it would not shock me if the market's going to rally off of the falling dollar if we get a falling dollar. Something to definitely watch as well. Weak dollar should impact commodities. Gold is just going sideways below the 50. Silver actually lost the 200. Oil consolidating here. And there it is, a buy signal on natural gas, a breakout, to me, a buy signal. And even though it was down on the week, a retest of the 200, a hold, and a move higher on Friday. So I had said that if natural gas was to break out or to get above the 200, that I would consider something like Boyle, which is a 2x, once was a 3x leveraged ETF on natural gas. And you could see, has broke out a little bit. 10-year still plugging higher, was up again on Friday. Let's just make a weekly of this one too. I don't know why I don't have that. Get that to weekly. And you could see on the weekly it moved higher. It was up 2.24%. We already looked at the timing model, so we'll skip that. Let's go into the hourly sectors and see if anything stands out as showing strength. Well, discretionary has been strong. It probably still is the strongest that I see, so I'm going to leave its star in place. But it's showing some, a little bit of consolidation in here. Right now, maybe nothing worse. Technology has held up, as has communications. Materials, dead. Energy, pretty dead. Industrials, pretty dead. The defensive staples, real estate, utilities haven't done much, and healthcare may be starting to turn up. I'm surprised it hasn't turned up yet, considering we're just 2 or 3 weeks away from the JP Morgan conference, where last year there was a bunch of transactions that occurred. We go into the scanners, and there's different ways we can address scanning the markets. I'm going to do a couple of things that I like a lot in wealth charts, and then I'm going to jump into the Market MRI Pro and show you, and then something in TradeStation. So we'll have a little bit for everybody. So let's start with Market MRI Pro. Let's go into the heat map for the S&P 500. Pretty ugly, and let's just look at some of the big boys. Tesla, it's well off the highs, still holding to the 17. That would be I talked about a lot of stocks have pulled back to support. That could be a flag, and we might be looking perhaps to see some kind of a breakout from this level. But Tesla's pulled back some. I see no reason to jump and be long until it takes out that trend line. NVIDIA, struggling at the 50. Again, many of us, myself included, already have positions. Many of us have positions from a long period of time. And you wonder if there are people who bought back down here, are looking to sell after the new year comes. And that could be a burden on this stock. And again, no reason to jump and run until it breaks above the 50. Apple, just off its all-time highs. What a beautiful looking chart. I'd like to see it resume before I jump further into it, but that looks better than the other two. Mr. Softy pulled down to the 50 and bounced a bit, a little bit of a bottoming tail. Be interesting to see if that moves higher. Meta, been a huge player, has pulled down to the 50 again. Is that a natural place to expect a bounce? Amazon broke down below the 17. Really hasn't done much since setting an all-time high. I'm not looking at this and thinking the end is near. I mean, I'm thinking you have a nice little opportunity for a flag formation in here, perhaps, after a big run. Let's see, what else do we want to look at here? Google, again, just off of its highs, it looks pretty good to me. Nice bottoming tail or tail below, not really a bottom, but it says that it pulled back after falling earlier in the session on Friday. Netflix, big earnings, typically does very well. The first earnings of the year, sort of basing up here after hitting all-time highs. So you look at the big guys don't look bad. None of them, I said, are horrible. Some I'd like to see them clear the 50 above them, but holding okay. Going to the Well scanner, which a week ago was ugly with nothing bullish and the high numbers, besides some short instruments. So let's see. Again, nothing above 800. Covered calls, short, natural gas, and that's not beautiful. Covered calls, oil, commodities, but now we're in the 600s. There's absolutely nothing to love on this chart here. Now, why don't I just go and let's look at the bearish? We can, but in the midst of Santa Claus rally, when the market's up 75% of the time, do I want to tell you to go short the markets? I'm not that guy. I think you're going to have an opportunity to short. I just think the markets could rally this week. Agribusiness is sold off. Dividend payers, rates go selling off. Transports pulling down to the 200. These are all max, the 520. Steel, investment grade bonds, emerging markets, REITs, lots of bonds, home construction. There's a lot of negativity, and maybe this is the right direction. And I do have some shorts that we can look at as well. What I really like to use is my CAT scanner, and this is not a day that I feel like you're going to win by being a top-down guy. So I'm going to look bottoms up and see if there are any things that are going to show up, stocks that have been in an uptrend that have pulled back that are giving me a buy signal. And I have a list of 5 stocks, 6 stocks that I liked. A couple of them are on this list. So let's just go to the larger weekend list because it's a fresh list. I want to look at that one. I call that my weekend review. See if we get a few more things pop up. I don't know how we had less. All right, King Soft Cloud. This is a young stock, really moving. This was the time to get in. And if you just look at this, and anybody's watched me for any length of time. Sorry, I'd step away for a second. Of course, there's a runner here, but this is a big, as Morales and Katcher often define them, Bible gap up. You have a fanning out of the moving averages. You had great volume. You had the breakout signal the session before. 2 momentum signals in a row, which is one of my favorite things to look for. You could see relative strength and OBV look good. Now, if you go back here, when the first time it started showing up on my scans, except for the fact that it looked short-term extended, which it does here as well, massive volume. That is a launch indicator from Rob. That's his wealth signal. You could see all these dots came in, a break of relative strength here, short-term break, and of OBV. And then again, you broke here. Similar pattern, big volume, lots of dots, and then a relative strength breaking out in OBV. This one failed. This one did not. This is an interesting pattern. It's a runner. It's something that has a lot of relative strength, but it is getting extended. That was one that I liked. Also on this group, HTGC. Now, very different looking chart in that this thing has been bouncing around. But on the shorter time frame, Just did there. Looks like it had massive volume. Sideways move, breaking out above a confluence of moving averages. You can see that relative strength has broken out, OBV has broken out, and coming out of a squeeze. And this one pays a 9.6% dividend. Teva, I liked a week ago. Let's take a look at it. And you could see Teva had a big gap up. So you look at Kingsoft, and here's a stock that had a similar big gap up and was clearly extended. Just because you're extended doesn't mean you can't get more extended, and this is one that has continued to run. So we've got a few more stocks to look at as we go, but that is it that shows up looking at a large list. Now we can look at rockets, things that are leading, and you can see a lot more stocks are here. So this just tells me, when I'm looking at rockets, that these are not pullbacks, so they're going to be extended. I don't know grid dynamics. So here's a nice uptrend, a gap up on big volume, relative strength and OBV look good. I don't like where it closed, so that's a reversal candle. This one, Gorilla Technologies, is a young stock, and I could have put this here instead of Kingsoft. It's very similar. It didn't meet the criteria for the buyable or big gap up on Friday, but also very extended. I think Rigetti might be, I don't know if it's a quantum computing stock, but these are darling of the markets, but getting extended. American Airlines, I mean, the airlines are doing well. Even Allegiant looked good. And big uptrend, the pullback and running again. But you're looking at how many of these stocks have dots. Not that many stocks have the big dots, which is interesting. What are the dots, you might ask? These dots here represent gaps, volume, breakouts, and momentum. And rarely will you find a stock take off from a base without having one or more of those. So we could stop here and say pickings are slim. Weave is one I like, but it's also getting extended. Nice, beautiful uptrend. Is this a great place to be buying it? No, you want to buy it down here. You want to buy it down here. But if you're looking for runners, this is one that looks pretty strong as well. Archer is electric EV planes, big run. Not much revenue, very extended. Another one I liked was AEHR. In fact, before I look at that, let's just look at semiconductors, SMH. There was surprising strength this week, I thought, in semiconductors. And then I looked at the charts and I said, wow, this thing has been basing and going tightening and tightening now for months. I think semiconductors could be setting up for a big run coming out of a squeeze. And one that I liked was AEHR, A here, Test Systems, and failed to break out here, or maybe we had a cup and a handle and a breakout, the 50s crossing above the 200. I thought this was an interesting chart pattern as well. So that's some of the things I looked at. Now, as I mentioned over and over, I got more than one platform. See if the trade station's done running. Perfect. So my buddy Van fixed what I think has been the biggest flaw of TradeStation. What is that, you might ask? Well, radar screen is the best thing in TradeStation. I can have instruments listed here, all kinds of different signals here. These are Sagar's tools looking at his various setups. I can look at who's got my dots firing and how many dots. Are they long? Are they short? I could look here, relative strength versus the spider, finding stops that are turning positive. I could look at IBD type relative strength. I could look at Morales and Catcher Bible gap ups occurring during the day to find them. Best tool. I can't duplicate Radar Station really on any other platform. Intraday, and it treats the current candle as if it's closed. The problem is if you go much more than 500, 400 symbols, it's going to kill your system. It's going to give you errors and kick you out multiple times. Not the most stable thing. Now, TradeStation Scanner is great as well. And I have a whole bunch of scans that I run. I've got John Person scans, I got Q scans, some of my own scans. And the cool thing about this is I can scan for, I can scan for thousands of instruments. The downside of Scanner is it doesn't treat the bar closed until the end of the day. So if I want to look at a daily chart or a daily bar at 3:30 and look for my signals, it's going to show me yesterday's bar. It's also extremely slow, and I have stability issues there. So what did Van create? Van created his apps, and his apps are a tool, and I'll show you one way to use it, that allow me to very rapidly scan a list. So let's choose a list, a small list. All right, let's choose the S&P 500. So 500 instruments. And I'm going to scan it for price, squeeze, up dots, down dots, and my other signals. And hit start, and hopefully it won't take too long to run. At 25 every second, it shouldn't take too long. And what it's doing is it's an end-of-day tool. It's going to scan the entire market, and then I'm going to get what looks like a radar screen, but I'm going to see the results. So I could rank them by how many up dots. I can look at my EMS signal, which is an early signal that fires. I could look at my CPR signal, another trading system I use. I could look at, is a daily bond go red or green, and how many days ago did it flip? Same thing with the relative strength, high-low jump, and then the D-like relative strength. So this is a great tool for helping me ferret the market. Now, if you've been watching my videos for long, you know how much of a fan I am of Sagar's Q tools. So if you own Sagar's toolset, and if you have my app, there is a nominal, I told you I wasn't going to solicit, there's a low-cost add-on that allows you to do a scan that includes both. And let me show you how I find some great stocks. So this is the consolidated buy list, the same buy list we were looking at in Wealth Chart. So it's about 2,000 stocks. I can, again, rank them by whatever thing. I can look at which stocks had a Sagar pullback or Sagar breakout or bounce, box, so on and so forth, as well as my dots. So let's filter, and let's look at one of my favorites to the long side. One of my favorites to the long side is pullback in an uptrend with a Q breakout. So combining my tools with Sagar's tools. I'm going to hit open. I'm going to hit OK, and this big list is going to get a small list. It gave me two. PGNY, and to me this was sort of a bottom dweller buy and not one that's real attractive, although the weekly relative strength is about to cross over the spider. The daily OBV looks good. Somewhere in here I could find. Looks like it's the green is above the yellow, so that means the relative strength on the daily has already crossed over, which is good. All right, there you go. So you could look at relative strength, you could look at OBV, daily and weekly. You could see the preponderance of dots, and it took out this trend line. I'd have to look at a bigger chart and see how important this trend line was to see if I wanted to chase it. But Supernus did look interesting. Let's blow this chart up. Here is going back to June in a nice uptrend. Here's a bit of a flag. and a breakout from that flag. And I like that a lot with the breakout, momentum, two momentums in a row from the squeeze. You could see, I got to fix the formatting on this one, but that's why it's disappearing on me. It's just an adjustment I forget to make sometimes. But you can see we're positive on the relative strength. We're not above 95. We're at 49% on the high-low, and OBB looks good. And this here is an EMS signal buy. So there's a lot to like about that one. Now, maybe I don't want to go long. I want to look at shorts. So I can filter those results. And the beauty is you can take any of these and toggle them and create your own. So I'm going to look at a shorting one, which is a retracement and a downtrend with a breakdown. And then very quickly, it takes the results that we already got from the running the scanner app, and it gives me BJ's Restaurants. I didn't like this as a short because it's sitting right above the 200. And as I agree with Lee, I'm not sure this is a great time to be making a lot of buys for shorts. Got the 200 right here. All right, what else can I show you? Go into the Market MRI app. The charting module is too slow, and that's why I haven't released it yet. However, Praveen, my genius programmer, who many of you met in Orange County, has built a new scanner, a new charting module, which he's attaching to the scanner, and I hope to get a beta of that either tomorrow or next week, and then we'll start to release the beta and do the launch in January. I think the scanner is incredible. I'm looking at the JAS list, which is combining the NASDAQ and the NYSE, putting $100,000 minimum shares traded in a $1, and I have 34 instruments. From a top-down perspective, it automatically assigns each instrument to its sector. We could see all the sectors were negative on Friday. Here are the industry groups. There's your 11 sectors, 144 industry groups. I've got them ranked by my RM2 short-term momentum. And there's just not a lot here. So if we just pick off the first 5, 1, 2, 3, 4, and 5. Then the stocks that are in that list here, there's 81. I can rank them by short-term momentum. And you could actually start to go through and look at these. Amadeus, and you'll see what I mean about the time to load some of these. That's in the process of being addressed. But this is slower than normal, which means he might be working on it. But the point is we're able to find the leading stocks in the top industries. And you could see this one is a story stock. They're to be bought by, I believe, United Healthcare, and they extended, I think, the terms of their deal. AIRE, don't know anything about them, don't really care. Why is a negative stock showing up? Because it's looking at more than just one day. Boot Barn in the shoes, that's kind of an interesting. Big pullback, breaking out above the 50, above the 17. DDS, is this Dillard's? Who would think that big retailers made the list? Lulu was one stock I liked on my top-down review, sort of a flag, and people that know me know I love to look at flags. So I can bring the top stocks and the top industry groups up as part of my analysis. I could look at just what's in, if I want to look at what's in energy, you're going to see there's 10 groups in industry, there's 204 stocks, and the leading by the short-term momentum is exploration, brings it down to 58, and I could look at those. Look at where Oxy is, considering that Warren Buffett bought into it in the $60 range. So a lot of ways you can manipulate the top-down view. Then I have the bottoms-up approach where I have the entire listed at 3,300. And I'm just going to show you some of the things that we've been working on One of my favorite things to do is filter this down. So this is bottoms up we're looking at now. So I want volume greater than 500,000, price greater than $5. And what I might look at is my two-day K-force up, which is my momentum 2 days in a row. And here's going to be some of my favorites of the day. SUPN, which we talked about, uptrend, pull back to the 50 in a breakout, good volume, breakout momentum out of the squeeze. OBV is green here. And I can tell that relative strength is also green. Again, I can't size this with ease, which is one of the things we're switching. GDS is another one I liked a lot. Uptrend, sideways move, breaking out over the 50, relative strength and OBV positive coming out of a squeeze. Kingsoft rather, is where I started looking at stock charts and wealth charts. Big breakout here. And then I don't know if I looked at PDYN yet. Paladine AI. It's probably a young runner, broke out of a flag here, major volume coming in, probably worth taking a look. I can do a similar analysis to the downside. I don't think I saw many. Let's see. Turn off the up. Look at the down. Yep, none showed there. So from a top-down perspective, markets, neutral at best. I'm leaning towards the long because I had 3 out of 4 of the weekly charts still positive, and we're in a bullish time of year. But I'm not so bullish that I'm opening up lots of positions. It means I've left some of them on. From a sector and industry group, it's hard to find really good leadership. In fact, I'll even go old school. And yes, I use HGSI every day still, despite all these tools. And one of the things I love to do is to take HGSI and find my industry groups here, which is right here, which is 175 industry groups at the warehouse view, and look at how many of them have 2-day force up. And this was shocking. 1, 2, 3, 4, 5. How many have 2-day force down? That's worrisome. Now, that can bounce very quickly. That's a 2-day, very quick move. 5-day down, 74. 5-day up, only 23. So leadership from an industry group, which is what I look at after my market determination. Specialty apparel, think of Lulu, think of Abercrombie and Fitch, both look like they're setting up. MLPs that pay big dividends, ET is the one I own. Department stores, we saw Dillard's. Tobacco, I don't look at because I'm a cancer doctor. And then entertainment content. And then everything else had negative 2-day force. And we looked at some stocks, and my favorites just to review. KC, that King's Cloud Software. AHR, a semiconductor. GDS, HTGC, which pays a 9.6 dividend. SUPN, which was a pharma, and then there's one I don't think we looked at. Let me put it up here. Let's open it up in TradingView. Same tools, doesn't matter what platform. And that one is KD. And KD is, here's what I really liked. This is GDS. We'll talk about this, then I'll go to KD. Look at all the earnings surprises on GDS. Great earnings per share growth. Next earnings are March 12th, and it broke out of this trend line here. KD, basing here, I'd like to see it make its move. Look at the big surprise in November. Something made me like this. Let's just look at this at HGSI, see if I can't remember what it was that made me excited by it. It's in my category of pullback waiting for, and I remember now what's exciting, and I'll show you. Pullback waiting for a signal to buy. So right now it's not a buy. That's why the chart didn't look so great. Here's why I like it. Here's a stock that's gone from negative earnings. It's supposed to make $1.16 in 2025 with 1,153% growth. $2.07 in 26, 79% growth. Do you think the stock's undervalued if it gets anywhere close to that? On that note, I'm going to say goodbye. So last time I'm going to ask today, join my Google group. You'll get the invite to the live meeting. You'll get extra discounts on my tools. And like I said, I'm not here to solicit you. Have an awesome rest of the holiday period. Have a safe, healthy, happy New Year's wherever you are. And I'll look forward to seeing you on Top Down Trader. Goodbye.